Hello, founders. Welcome to Startups.com. We are here live, company every Tuesday, Wednesday, Thursday. Tuesdays, we do pitch decks. Wednesday, we do everything with getting customers, traction hacking, all that good stuff. And then on Thursdays, we take on all the topics that are totally hot that the founders out there you want to be talking about. And we have a no holds barred conversation. I have here with me founder and CEO of Startups.com, 9-time founder with 5 exits, and you pretty much been everywhere, Will. Today, this has been a topic that's been on your mind. It is how to get warm investor referrals the right way. We're going to be talking about this. And everybody, just use the Q&A box or chat to ask questions if you're joining us in the live studio audience, or you are out there on the interwebs. Do the YouTube thing, like, comment, subscribe, but ask us the question. Well, I'm going to start off right away. Why is this such a hot burning topic for you? What's on your mind?
Okay, so I've been helping founders raise money for decades, and when I talk to founders, they're like, "Hey, I want to raise money, but I don't know any investors. Why would you? Right? Like, why would you know a bunch of investors? It's not like that. There's one founder that's never done this before that somehow magically knows tons of people who are actively investing. It just generally doesn't. That said, question, which is a very obvious question, is how do I get to know investors? Like, how do these introductions happen? And so the thought is there must be some magic introduction person like Ed or Will that I meet, and that person, almost like it's The Bachelor, introduces me to 25 potential investors and I just pitch them all, etc. Except it doesn't work anything like that. Like not even 1%.
Sure.
Even in cases where people think it does, like they join Y Combinator, they join 500 startups, they join like, oh my God, and then all these investors come to me. Yes, all those investors come to some of those people,
Right.
not all of those people, right? And like when you talk to those folks directly, it's never what you think about. And that is the top 1% of 1% of 1%. Ed, we talk to everybody. We've got 1.3 million companies on our platform. We talk to people from all different walks of life, all different industries, et cetera. And again, the universal question is, how do I get investor introduction? Not how do I reach out to investors? We all know that we can send an email. Where do I get specifically warm introductions from investors? So what I want to talk about today, I want to talk about the 3 places where you go and get these warm introductions. And I want to talk about exactly how you do it.
Let's back up just a bit. I want to double click on something that is very common prevalent, and I think we can just address it right up front. I have a lot of comments on my YouTube, on Startups.com. We get it on Reddit saying, oh, you know what? The whole deck is stacked against me. If I don't come from an Ivy League college, or I'm not the child of a general partner of a fund or an LP's kid, then I'm never going to get introductions. This whole thing is rigged. And they get very upset and kind of, it's pretty victim mentality.
Yeah.
If you're asking me, what do you say to those founders who think that?
I'm saying that if, like anything else in life, look, man, if you are in the world where you are in the top 1% by default, of course you have a leg up. That's literally the nature of it. But most of the people we talk to and most of the people that we see get funded are not in that top 1%. They're just regular people going out there trying to hustle and deal together. Now, that said, I don't think that there's much visibility as to how that actually happened. So we all create stories. We all create narratives of what must have happened. But when you talk to these founders, and Ed, we talk to them all day long, they're like, nothing about me getting funded even was remotely privileged.
Yes.
I had to get my teeth kicked in the entire time in order to get this done. And what's funny is I'm starting to go through the Rolodex in my head of the privileged people I know and how much they got their teeth kicked in, right? This process isn't easy for anybody, right? And again, if you've never been through it, you don't understand that that's true. So you make up a narrative that sounds convenient.
I think this is going to be a very illuminating conversation. As Will gave us a little bit of an intro there are going to be 3 referral sources that we're going to talk about today, everyone. It'll be through advisors, from founders, and other investors.
Yep.
But I want to set up this conversation first and say, what's the wrong way to get warm investor referrals? Because, Will, you're experiencing this daily. I just dealt with a deluge of LinkedIn messages, total wrong way. Let's just talk about what not to do, or some of the misconceptions out there on what to do that sort of shoot you in the foot before you even begin to learn what to do properly.
Number 1, assume anybody owes you an introduction. Okay. Assume that just because you want an introduction, that anybody owes you an introduction. I want to explain, because this is the single most important thing, because this permeates everything we're going to talk about. I want to explain what you're actually asking for when you ask for an introduction. Not even just to an investor, to anyone really. But let's specifically talk to an investor. And Ed, I'm going to play this through you and I, okay?
Great.
Ed, I'm a founder, and you are somebody I know that I think might have investor connections.
Okay.
And I say, Ed, will you make some connections for me because I'm raising? There's a bunch of things that I'm wildly overlooking, usually without even realizing it. Number one, what's your incentive to do that? What's your incentive to burn your social capital in the relationship that you have with that person for my benefit? Most of the time as a founder, it doesn't even occur to me that I should think like that.
Right.
Just the fundamental self-awareness that when I ask someone to burn their social capital, which a lot of people are like, oh, it's just an email that they're sending. No, it's not. It's not. Yes, you're typing an email, but that's not it. What's happening is, Ed, you're saying, I want to represent you, me in this case, the founder, with my reputation.
Exactly.
I want you to be able to steal my reputation for your benefit, right? That is not incidental. That's why celebrities get paid millions of dollars to represent a product, because you're taking their credibility and selling it for someone else.
Let's expand on that just a bit. Will I tell founders, hey, I appreciate you asking, especially if I don't know them a lot. It's taken me 30 years to build up my social capital that I can have those relationships. And it'll literally take me less than a minute to burn it all down and to completely go right to zero, or even less, because I'm only good as my last referral. So
100%.
The incentive's not there because the risk is so high, and strangers just coming out and saying, hey, I looked through all your LinkedIn connections. Can you give me a referral for that? Again, like you said, nobody owes you a referral. And sometimes, what frustrates me, and I know where it comes from, and founders just don't know any different, but the entitlement frustrates me to no end, where I don't want to lift a finger for anybody.
Right. And so let's take this from a couple different places, because before we get into these three categories of where you get the introductions from, it's really important to understand what you're actually asking of these folks and how to actually ask for it. Okay. So number one, when we go out and we say, will you make an introduction for me? The first thing I need to know, this is me, Ed as the founder, you as the introducer. Okay. What is Ed's incentive to introduce me? Or said differently, what's Ed's cost?
Right.
Okay. Now, most people don't understand social capital. They don't understand the idea that when you make an introduction, that you are burning some social capital. I'll give you an example. Ed, I'm sure you deal with this all the time. People make introductions to me, the friends of mine make introductions of strangers to me all the time. 9 times out of 10, I wish they hadn't. 9 times out of 10, it's a distraction. It's something that I didn't want. It was for someone else's benefit, not for mine. And I look at the person who made the introduction negatively, okay? Now, here's how that narrative gets distorted. The founder, that's looking for money, is like, well, hold on a second. Aren't investors looking for deals? Yes, they absolutely are. That doesn't mean they're looking for your deal, right? It means they're interested in the best deals.
Right.
And if I have essentially Facebook and everybody else has been investing, and I can somehow get them an inroad to a deal of a century, then they will reward me. Short of that, I've just created a whole bunch of work for the person I made the introduction to. And here's my favorite part. I think you actually knew this. I've actually introduced a lot of my closest friends to their spouses, to their husbands, wives, etc. Okay?
I've met them.
Yes, you have. And I'm proud of that fact. However, I stopped doing it a long time ago. And here's why. When it goes really poorly, I'm the first call that they both make. And they're like, it's all your fault. But when it goes really well, at the wedding, no one remembers how they got introduced, right? I've been at weddings of close friends, and they'll do this backstory of how they met, and I'm like, I'm not even mentioned. Not that I did it for credit, but like my point is, and they got married. Right? So stick with that as it relates to investing, okay? If things go really well and I make this introduction and you go on to raise a bunch of money and do well, how does that benefit me? Oh, well, I guess it doesn't, right? How many things do you do in life that have no benefit to you whatsoever that you do purely out of the goodness of your heart? Maybe a few things, but not that much. And this isn't a long disclaimer to say don't ask. This is a long disclaimer to say know what you're asking. Understand the value in the weight of asking for a referral. It's not insignificant. And specifically amongst investors, Ed, etc., we don't get a lot of shots to do this. It's not like I just call the same person 12 times a day and say, here's another mortgage referral, right? I get to play that card once or twice a year, right?
Yes.
To make that referral. So when I do, I have to make sure it cannot go wrong.
I had an investor one time tell me, Ed, I will write any check to any charity that you want. And just give me a total blank check. If you're at some charitable thing and you want to write a check and you think that it's worthwhile, I will write that check. Totally carte blanche. Bill, I never played that card. Not once. Not once, right? So that's in the same vein. Now take it to investors. I have GPs. I have managing partners actually tell me, Ed, I will look at any deal that you send me. Any deal, and I'll get you an answer in 24 hours. Maybe I'll send them 1 out of 30, 40 deals, because I understand the cost of this. And I think that founders can really listen to what you're saying and understand, sure, there's your perspective as the founder, but then there's the investors and the referring person. And often founders don't take that into account. So point taken.
Yeah. And so again, what we're going to talk about across these different categories is asking for warm introductions. So this isn't a long way of saying don't do it. It's a long way of saying understand what you're asking for and let's talk about how to do it well. So when you do it, it's a +1 for everybody in the chain.
Let's jump into how to get warm investors referrals the right way. And we're going to work through each one of these. Use the Q&A box, everyone. We'd love to hear from you. As always, just reminding you, this can be interactive. And there are 3 referral sources that we're going to talk about through this series. The first one, Will, is through advisors.
Right.
Let's set it up. Tell us what this is all about.
Okay, so I wanted to open up with this one because this is maybe one of the most underutilized of the 3. Okay. And what I like about it is it's so within your control. This is something you should be doing anyway, but it looks something like this. Every startup in the formative years should have an advisory board. And when people think of an advisory board, they misunderstand what that actually means. They make it way more complicated than it sounds. They think of it's like, oh, well, now I have a board to answer to and blah, blah. No, that's a totally different board. That's nothing to do. These are typically 3 to 5 people that you build a relationship with, that you give them an infinitesimal amount of equity, like less than a quarter point of equity. Okay. Just a tiny amount, right? In order to basically use their guidance in the form of advice, et cetera, but also their Rolodex. By the way, that quarter point or whatever you gave them to be your advisor is how you gave them the +1. It's how you created an incentive. This starts to manifest in a bunch of ways. Number 1, when you give them that equity, they owe you something back, right? You've just done an exchange. It wasn't just you stealing from them, stealing, their goodwill, et cetera. You're paying them compensation for their investment. Number 2, they likely aren't taking the job if they think you're an idiot. It's so like, I've never heard anybody go, I really want to be an advisor for a company I hate, right? Like the two kind of go hand in hand. So if they agree to be your advisor, chances are they like you and that they want to do well by you. Okay.
Right.
So you've got a transaction that you've consummated, right? Which has helped you kind of like buy the goodwill of that intro. But you've also got an implicit thumbs up that you're a good person that they're looking to help. Now, the reason I feel like this is so underutilized, Ed, is because for startups, we could use the advice anyway. But what it really helps us do is expand our network. Whenever I was building a company, I always started with a board of advisors. Super easy to do. And Ed, you could probably appreciate this. Most people are very flattered when you ask them to join your board of advisors.
100%.
Right? Ed, I'm sure you're in the same boat because of what we do, because we naturally advise startups all day long. I get asked to be on a board of advisors every day throughout the year, right?
Oh, yeah.
And I'm flattered by it every time. And for those of you that say, oh, I didn't know Will and Ed would be your advisors, I won't put words in your mouth, Ed, but my answer is already no. I'm on the board of advisors for exactly 0 startups, even though I get asked a billion times. Part of it's because I get asked a billion times. If I say yes to one, I have to say yes to many. But the other thing is, I spend my whole day advising startups. I'm not looking for more work.
Right.
Like, oh, shut up. I haven't advised enough startups today, right? I've been on the phone with 10 different founders today. I'm not looking for an 11th and a 12th. So I already advise for a living.
Yes.
And you get my advice for free. But the other part of it is this. When you talk to advisors and you say, hey, I'd like you to join as an advisor, there's also a dialogue, Ed, that I think is an expectation of what comes with being an advisor that you need to set. I'm going to need your help making introductions. We're going to do a capital raise in the not too distant future. I could use your help getting some investor introductions or intros to founders who might be able to introduce me to investors, which we'll talk about next. What's your take on it?
I completely agree. If you look at an advisor, typically the good ones used to be founders. And they probably had an exit or they've experienced enough contact with the startup ecosystem at large that they're always meeting investors, other founders, people connect with investors. But here's the best part, Will. Investors love talking to me because I'm not trying to raise money from them. We're just all part of one big club. We're all used to each other. We're like, yeah, we know how this is played. There's no pressure. So we talk. And I just say, what are you looking at these days? And we just have such casual conversations that we're able to build those relationships and that trust happens. Therefore, advisors definitely, I agree, can be very powerful. And this happens every day here at Startups.com.
Okay, so a couple caveats with building an advisory board. Most startups, they inherently think, I'm not worthy. I'm not worthy of an advisor, right? Which is actually the opposite of what you should be thinking. You know what it is? It's this equivalent of somebody that, let's say, isn't in very good shape. They're very, very overweight, and they're like, I'm not worthy of a trainer. No, that's the whole reason you're supposed to have a trainer.
Exactly.
Right? Because they're going to help you achieve your goals. So if you're already, 8-pack ripped, then you probably wouldn't need a trainer, right? In which case their use wouldn't be very high to you. So here, where people tend to go wrong, where founders tend to go wrong, is we don't ask high caliber people to join our advisory board because we think we're not worthy. So one of two things happens. Either we don't ask anybody, right? And just the process never gets started. Or the people we do ask are almost like the people that really weren't going to be that much more helpful. What I love to see, I love to see people punch way ahead of their weight class. In other words, I like people saying, hey, I know my startup's only here, but I'm going after this person. This person is my dream advisor. Here's the dirty little secret. They'll probably say yes. They'll probably say yes.
On top of that, Will, I've said yes before, and I've said yes without shares, without getting paid, without incentive, just because if you have the moxie to, like you said, punch above your weight, man, I want to see what happens. Like, that's exciting to me. And therefore, I've helped so many founders, and we do this here because we want to. And often, like you said, founders take that for granted, or they don't really realize that a lot of the advisors out there just want to help startups because that's what we do.
And also, I don't want to overlook this part, Ed. It's an ego thing. And don't, founders, as you hear me say this, don't underestimate this one. When you say to somebody, I'd like you to be on, a board of advisors for my startup, that plays to their ego. And everybody has one. And then they go to tell their friends at the cocktail party or country club later, I'm now on the board of, blah, blah, blah startup that's doing this interesting thing. That's an incredibly powerful emotion to attach to. And it's way more prevalent than you'd think. But you touched on something, Ed. Scrappy person, some 19-year-old college kid, right? Somehow finds your contact information and reaches out to you and says, Ed, I know I'm nowhere at your level, right? I get that. But what I'm building is going to be badass, and I want you to be a part of it. How do you process that?
I will right away have an open mind. In fact, how I process that, Will, is I empty the toolkit. I pretty much empty the chamber and I say, I'm not going to have any preconceived notions just because now this person's earned the right for me to be a completely open-minded person. And I'll just start from ground zero. I'll be like, okay, let's start right now. Give me the pitch, right? And everybody gets an opportunity. Will, I have people on LinkedIn pitch me all the time, and they just show up and they pitch me if they intro themselves the right way, just like you said.
Yep. Now, with that said, most people that you would think are getting asked all the time are not getting asked all the time because they're just busy doing other stuff, right?
Right.
I'll give you an example. I would go after like the CEO of a big company when I would ask, do my advisor ask? And you would think they'd never give me the time of day. It's that old adage I don't think we're allowed to use anymore, which is nobody asks the pretty girl to the prom.
Right.
And that tends to happen a lot.
It's true.
Right. And so what I would say when you're looking to build your advisory board, think about who would be interesting and then go way above that. Now, here's also why. It's not just so you've got the bravado of punching above your weight class.
Okay.
It's because the further away from your level, whatever you perceive your level to be, you get, the bigger the likelihood, the value of the network's going to be of that person.
Oh, so true.
Good friend of mine that was actually wound up being my business partner at my first business. His father started a company called Cardinal Health, which I think is like the 16th largest Fortune 500, maybe 9th now. When my business partner's daughter just graduated top of her class from Harvard, his dad got her in front of the CEO of American Express. Okay.
Ooh, nice.
Think about that Rolodex.
Yeah.
Right. And he's on the board of American Express. So, obviously he's got some connectivity there. My point is this. She now has access to the Rolodex, the CEO of American Express. I mean, ironically, her granddad started the 9th largest Fortune 500 company. So he has that Rolodex too, which you could see the value. I want you to think about it like that. How can I get to somebody that is a level beyond a level beyond a level up beyond me? You know how you do it? You ask. It's just that simple.
What's the worst that could happen if you just ask?
I mean, even if they say no, they're going to respect the ask. It's not an offensive ask. It's a huge compliment.
Oh, yeah.
Right. So you should be excited about giving it. And again, if they say no, sort of who cares? Either way, you had the conversation. They're going to come away going, hey, that person, thought I was interesting. They're going to tell their spouse about it.
Okay. Technical question then, Will. And I think this goes to a lot of times I've heard this. In your mind, how do founders navigate the expectation of investor referrals? I've seen founders try to include it in the advisory contract. Mm-hmm. I've seen founders not bring it up and then assume it's going to happen and then they're sorely disappointed. What's the formal engagement look like for this to happen?
I think when you get to the point where you have to put it in a contract, I think it's because you've got like a transactional relationship with that advisor. In other words, it's almost like you're negotiating that, hey, if you give me some of your stock, I'll give you some introductions. That's a bit of a different dialogue. It's not bad. It's just different. Most of what I've seen or what I've experienced has been more handshake or understanding. Verbalized, by the way, right? Like you'll say, Ed, I'm trying to recruit you to my advisory board. Hey, I'd like you to join. And as we do our fundraise, I could use your help with some introductions on the road. Would you be comfortable with that? And you either say yeah or you don't. And I kind of leave it at that. I've never had to commemorate it in a document. However, if that relationship had come together differently, if it was, hey, I don't know you that well, but someone told me you could make introductions and you're kind of selling me on the idea that you could make introductions, but you'd like some of my company, then I might look at it something where I'm going to you kind of came to me almost, right? Then I'm going to probably want something a little more formalized.
Yeah, well, when a founder offered me an advisory agreement, and if they say you have to introduce me to X amount of investors or your incentives are based on how much money that I raise, I don't say yes to that
Yeah,
because
yeah. At that point, you're being pimped.
yes, it's just the power dynamic. That's not a good advisor relationship. So this is where you just get to know the advisor up front and make yourself the type of founder the advisor wants to refer to investors, and you'll be okay.
Yep. And so with that said, going back to the premise here, I have no Rolodex. Okay. I don't know any investors, but the advisors that I'm recruiting do. And that was part of why I recruited them. I said, hey, Ed, I know you've had an exit. With your exit, you had raised a bunch of money from a bunch of investors. I could use your tutelage, and this is going to go into the next category. I could use your tutelage for how you were able to get in front of those investors. I'd like to pitch them. I'd like you to help me prepare for what to say to pitch them, to know what their hot buttons are, et cetera. That is a very fair and cogent ask. And I think any good advisor, like, yeah, of course, that's exactly what the kind of thing I'd be here to do.